In this video, we're going to tell you 5 top dividend stocks to look at coming this fall. Let's have a look at where we're going to find those top 5. We're going to talk to you about retail stocks and why the retail sector is going to be in focus coming this fall. Also, consumer durables and as well pharma stocks and drug makers also lingering in the background. Stick around because at the end of the video, we'll give you an extra one just in case you need one more to look at coming up this fall. Let's get going here. Neil and Sean joining me as always, guys. Let's jump right into the top 5 dividend stocks to look at this fall.
Sure. Thank you, Brendan. And mine's going to be a dividend stock that you may not think of as a dividend stock. And the big one for me is going to be Target. And why Target? I think it's pretty simple. We're talking about the fall, and you know what the fall is, and it's back to school. And this fall, it's also something else, back to work for many people. And I just think that Target has a lot of interest and a lot to offer many people heading back to school, obviously with books, clothes for kids, you know, anything related to school. And then you got going back to work. Target sells a little bit high. I mean, it's not crazy high-end stuff, but higher-end stuff than a Walmart. They have good stuff. They're on the jewelry side of things. So I think that, you know, people going back to work looking for clothing, looking to look a little sharp, they're going to be upgrading some of that. And let's go through Target right now. You can see this has also been a huge growth stock. I mean, talk about a pandemic winner. I mean, this thing from January, $91 in April of, I mean, this is a monthly chart here, so we should say that first. April of 2020, we were $90, okay? We've ripped up to $260 right now. That's monstrous, but forget about that. That's the pandemic slide right there. Even before then, you can go all the way back to 2013, and you're going to see very steady as you go. But the good thing about Target is, guys, they've increased their dividend every year for the last 25 years, including a big announcement. They just raised their dividend 32%. Okay, to pay out $3.60 per year or 90 cents a quarter. The yield on this, 1.4%. So look, it's not a huge yield. It's only 1.4%. It's not the best of the best, that's for sure. But if you think about the growth opportunities and you get some protection there a little bit with the dividend, I like Target heading into this fall for those reasons.
I absolutely love that pick, but it's not all about chasing dividends, Sean. It's not always about that raw number because sometimes that can get you into trouble. And I got to go 2 for 1 here, and I got a bit of a theme that I'm going to work with because I've talked about Pepsi before in the past on this channel. And look, I love the brand that you're going to get here. Just a nice little pie chart. And if you zoom in, it's a bit of a spoiler alert on a couple of names that we're going to say here. But when you talk about Pepsi and you've got Bubbly, I mean, like, give me a break. You got Tropicana, you got Lay's, Tostitos, Chewy. I mean, it's just all over the place, right? So Ruffles. You're going to get all of those good brands that are going to come into play, of course, with back to school. But the other thing that you get as well is a 2.7% dividend yield out of Pepsi. It's actually yielding pretty well here. And I do want to say that you can also go with the Mondelez, who just, I think, is a bit of a value, because when I show you the Pepsi chart, we're breaking out since earnings, and I think that you get some of that growth as well. This is going to be a daily chart, of course. You're breaking out from that 150, so you do have the growth play as well, performing really well in this current market. Mondelez is similar with a smaller dividend. They're only going to give you a 2% yield, or just lower than that. But they're actually a little bit weaker of a chart. I think maybe that can be your value play. But they kind of go part and parcel where you're getting that brand loyalty. You're getting all those in-play brands when we do go back into school. Better yield with Pepsi. I know I've given that one in the past. And just in case that's a bit of a cheat, that's why I would add Mondelez, because it's getting into value territory in terms of the stock bouncing off the 50 period after strong earnings, Brendan.
I'm going to give you one more, guys. That's number 3 anyways. We told you Target. We told you Pepsi. Here's one that might come into play because of infrastructure. Fastenal, not a name that you hear that often, but one that has a very nice looking daily chart. I'll show it to you now. There we go. Off of the lows, again, going back to 2020, all the way up to where we are today, 55 and a half. 2.1% on the yield for this one on the yearly side of things for Fastenal, and not one that's overly expensive as well. I mean, as we said, $55, so brings in a lot of opportunity. Not a terribly exciting trade, so it is, you know, in a solid uptrend. It's been that way for the better part of 2 years. Have a look at Fastenal. Sean, you have the next one.
Oh, yes. One of my favorites. I've been holding this one for a very, very long time. And you know what? This is a name that not only heading into the fall, I think can do good. Very similar to what Neil was talking about, where you have brand loyalty. Let's jump right over to Johnson & Johnson and go with J&J. A 2.46% dividend yield. They've increased their dividend every single year over the last 5 years at an average return of 6% increase each one of those years. Now paying 2.4% yield. And remember, the yield's going to be on the price, right? So you're going to divide how much they're paying out by the price to get that. So as this drops, the yield goes up, and as the stock goes up, the yield goes down. So that's why we're not super concerned about the yield number, but still 2.5% at all-time highs for J&J. We'll take it. And remember what J&J is doing right now. So sure, they've had a little bit of the headwinds with the vaccine. It wasn't as successful as they had hoped, but they will be shipping that vaccine worldwide. Hopefully those numbers get better. And not only that, I mean, J&J, look, the older population right now, that's what's booming. And, you know, Medcare, pharma, this is the largest cap pharma company out there as well. So you're going to have to look at Johnson & Johnson now. I believe this needs to be put in your portfolio. A lot of us are in tech names. If you're really heavy overweight in some of these names and you want to get something that's pretty consistent, this is a daily chart. So, you know, just going back to September, August of 2020, you know, you're seeing some big moves. But even before then, J&J is pretty steady as they come. Obviously, you're going to get the drop there on the pandemic. But since then, you're just nothing but upside love for J&J. It doesn't have a huge range. So if you're looking for a little bit of growth, you know, you think the retail could be strong as well. Procter & Gamble is another name, but Johnson & Johnson right here, I like them for what they're doing. I like it for the older population. I like it for the fall because I think there's going to be some tailwinds with some of that vaccine news. And let's get rid of the headwinds, enter some tailwinds. I like Johnson & Johnson here with an increase of dividend every year for the last 5 years. I don't think you go wrong. Have a little diversification. If you don't have any pharma names, grab some J&J, guys.
Absolutely, and we'll go with number 5 here. And this one, you got to dig a little deeper with this name, and it's a name you guys all know. It's going to be Walgreens. Now, I'm going to show you guys that you can see the increasing dividends. They're going to yield pretty good at 4%. But here's where it gets a little bit tricky because there have been some concerns recently, especially about the whole notion of boosters and with the vaccine being a bit of a boost for all the pharmacy names. And with that coming to a bit of an end, or at least a perceived end, they have underperformed the stock price. So that's going to drive up that yield. However, I do believe this is oversold. They have a brand new CEO coming in to turn things around. They're trying to make the pharmacy of the future with the aging population, with the notion that healthcare is front and center. They are definitely going to be poised for a rebound. So this is one that you're looking to get on a little bit of a value here. They're actually around a key support area in terms of the stock price. You do also get that solid yield when it comes to a Walgreens. And the key theme here is, like, look at the places that you plan to be visiting or that you know you're going to be visiting and the brands you're going to be buying in those next few months, especially going into the fall. What is the future? I think we've all understood that pharmacies have been a very, very important part here. So when you're catching this, offer 20% decrease, get that yield, and pick up a little bit of value. That's why I want to add Walgreens to this list.
All right. That was number 5. I promised you at the beginning of the video a bonus. Here we go, guys. Let's go to the Global Investment Manager, T. Rowe Price. Look at that daily chart. This is not a stock that I'm not sure we've ever talked about on the show or even on one of these videos, but T. Rowe Price doesn't get much better than this as far as a daily chart is concerned. This company has paid a dividend since 1986, 2.1% on the yield in the financial space. Very, very stable, big company. So we'll throw in an extra one at the end there, guys. That is the best dividend-paying stocks to look at this fall. Here's Valeria.
Hey guys, thank you for this helpful information. Dear viewers, please subscribe to this channel to see more great videos.